Hello and welcome to the VA Home Loan Podcast, brought to you exclusively by Real Estate Daily Magazine. I'm your host, Frank Ray, here with VA expert, VA guru, national VA home loan trainer, VA guy extraordinaire, dare I say, the smartest VA man on the face of the planet, Michael Fisher. How are you, Mike?
Feeling much smarter than AI this week, Frank.
You should.
I've
You
been
should.
killing it, man. People should be like, "Oh, ChatGPT showed me this." I'm like, "That's wrong." When
Ooh,
you work
see,
with matters,
ChatGPT needs to consult with you before it delivers
well,
an answer. That's what needs to
Chat
happen.
GPT takes information from other folks, and a lot of folks don't do a lot of VA loans, and they
They're
blurt out all
wrong.
kinds of incorrect information. And oh my
They're
gosh,
wrong. They're
oh
just
yeah,
wrong. Well, hey, speaking about just wrong, one thing that a lot of people get wrong, a lot of people get wrong. I can talk. I really can. A lot of people don't fully understand, including myself. I can't wait to hear this. VA assumptions, right? VA assumptions. How do they work? Right? Because you've got these VA loans floating around out there. They're 3%, something like that. And then people are selling the house and they say VA assumable loan. How's it all work? What's the
so
dealio there?
so much bad information out there, Frank. And I think it all starts with this concept that number one, you have to be a vet to assume a VA loan. And like number two, you can just assume a VA loan and it'll be a piece of cake. And there's a few things that go into it that really can make a big deal. So number one, anybody can assume a VA loan.
Really?
Doesn't have to be a veteran.
Whoa, 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 whoa. Are you serious? I didn't even already I've learned something. I thought you had to be a vet and there had to be some entitlement swapping going on or something like that. No?
Well, that's ideal. That's the better
Okay.
situation.
Okay.
And it's important for a veteran who might be selling their house through an assumption to know that if a non-veteran is doing an assumption on your VA loan, that the entitlement you used will not be restored or given over
Restored.
to the other. Yeah. So you might lose a little bit of what you do, but a lot of veterans don't even know this when they're out shopping. They don't realize what a cool feature the VA loan is. Like you could, this is a transaction that we just helped somebody with at S&P a month or two ago. You could buy a house, live in it for many years, and maybe you refinance it during 2020 because rates were fantastic. And you're just there for a long time. And the next thing you know, in the future, you go, "Hey, I'm going to move out of this house, but my kid's going to buy it." But your kid's a non-veteran, right?
Hmm.
So you could help your child do an assumption, take over your loan, and keep that super low payment and rate that you got during that time frame instead of telling them to go out and get a new loan. That's really cool, right?
That is really
Really.
cool.
So a lot of vets don't even know that when they're shopping, that they're told like, "Hey, maybe you should do conventional instead of VA or this and that." They don't even know what a good benefit that is to have that potential option in the future to sell to somebody else with the existing loan. But a part that they think they miss, and a part that I think is misunderstood, is that you can't change the balance of what's being assumed. So, if you bought a house at 250 and now it's worth 400, you're trying to sell it at 400 and somebody's assuming that VA loan, they're going to have to bring in some cash or they're going to have to get another loan for the difference. And
Okay.
that's where it can get a little bit off track and folks can get a little bit confused.
But you could do that too. So you could do so let me pause you on that scenario. I bought it for 250. I kept it for a while. I owe 200 on it, right? I owe 200 on it. It's a great loan. It's worth 400. Okay. Somebody wants to buy it. They're not a vet. They'd like to assume that loan. They don't have 200 to put down, but they got 100 to put down. VA will allow a non-vet to assume the VA loan and do a subordinate financing
Yes, sir.
behind it.
Yes,
Wow.
sir, they will.
You
Yep.
have got to be
Is
kidding me.
Nope, not at all. As long as the subordinate financing
Yes.
is aligning with the VA, and that second is also assumable. They want that second to be assumable too.
Oh, okay. So
Yeah,
there's caveats there. And
a
when you say
little bit.
aligning
Yep.
with the VA, you mean it can't be some, really crappy HELOC with
It could be
some
just some
crazy
random
interest rate.
hard money loan with an ill-defined agreement, and
Right.
normally it's got to be straightforward, standard in the box second home financing.
Okay, but it has to be assumable as well.
Yeah, the lenders that we work with at Success Mortgage that do seconds,
Yeah.
those actually fit in the box. We've helped folks at S&P do a second mortgage behind an assumption. So we do have
Wow.
lenders that, yeah, that'll do that. So like you said, that was a pretty good example because you picked an example where the person was potentially borrowing 100 and then assuming 200, and so they still would have had to maybe bring 100,000 to close. You
Right.
can find second lien providers, second loan lenders that will do that when the combination of the two loans, in our world, we call it combined loan value, right?
Right.
When
Hmm.
the combination of those two loans doesn't go too close to the purchase price, right? Like a
Yeah.
lot of times, a good number for us is what, like 90% or so,
Yeah.
right?
Yeah. Yeah. Like the
Yeah.
CLTV at 90 or something like
Mhm.
that. But,
Yep.
there's
If
probably
you're
a
trying
lot
to
of,
go 100, if you're trying to get all the way up to that four, it's tricky because at some point that second loan lender backs up a little and goes,
yeah,
hey,
they
that's
were not.
not
Yeah.
gonna
It's going to be hard to
be
find that.
right,
Yeah. It's going
right.
to be hard to find that.
Yeah.
Wow. Okay. What else? What else do we want to know about?
Well, so we just talked about the entitlement potentially remaining with the veteran if a non-veteran is sued. But if a veteran is doing the assumption, they can do what's called a substitution of entitlement. So they could help the other veteran completely restore their entitlement for a new purchase.
Got it.
So if I was a veteran and I was selling my house in assumption, I would definitely want to know how that part of it worked. I would
Hmm.
want to reach out to somebody. And what I find is that sometimes veterans will actually take some good advice from a realtor or loan officer and go to the servicer and talk to them. But the folks at the servicing companies, they're not really paid a whole lot of money to be like top tier. They're not commission based sales folks. They're not
Sure.
really advisors. So sometimes they get incomplete information from the servicer about how all that works. And
Yeah.
I find they still need to talk to a trusted advisor professional so that they make the right choice. Does that make
Mm,
sense
totally.
on what they're doing with the entitlement? There's a couple other little caveats that go with that too. It's not as common in today's world, but I've heard of assumptions in the past where for some reason they didn't completely do what they call a release of liability. So essentially, the liability for that mortgage and the payments and the credit reporting and all that stuff, you want to be released from that so you can kind of get that off your credit report and not have to deal with what's going on the credit side. Does that make sense?
Yeah.
So you always want to make sure if you're doing an assumption, you're the seller, that there's a release of liability that goes along with the final transfer. Does that make sense?
Yeah. Yeah. Okay. Okay. Good.
Now,
Good. Good to know.
yeah,
If I'm
yeah.
a vet and I want to assume another guy's VA loan, right? I want to come in. I want to do it. All the other stuff still applies, right? Like the scenario that we just said that he bought it for 250. It's down to 200. He can sell it for four. Got a really low rate. VA assumable loan. Vet comes in to buy it, right? They do the exchange of eligibility or whatever you called it, right?
Entitlement. Mhm.
The exchange of entitlement, right? But still, there's a $200,000 gap there,
Mhm.
and so it's not like the incoming veteran can change the loan amount or anything like that. He's assuming what's in place,
Mhm.
what's there, but at that rate.
Mhm.
And okay, so same deal goes there, right? Let me ask you about this. Here's a question. So I'm a vet. I want to assume another veteran's loan. Let's say I sold my house, right? I sold my house and I've got the 200,000, right?
Mhm.
I want to buy this one and I want to assume the other veteran's loan. Is there a funding fee?
Yes, Frank, there is a 0.5% funding fee, really reasonable, not all that expensive, and most folks will elect to roll that into the loan.
Oh, okay, cool. So they could roll that in?
You can roll in the funding fee, correct? Yep.
Okay, 0.5%.
0.5%, no biggie. Another
Okay.
piece that we hear about all the time that I think is really gets misconstrued or you see bad information all the time is that you have to be doing assumption as a primary residence. You could actually be an investor and you could be doing an assumption. And
Okay. Okay,
yeah,
wait. All right.
yeah,
Now you're just crazy talking.
I know. It
Right?
sounds like
This is
crazy talk.
this is just crazy talk. So you're
Yeah.
telling me,
Uh-huh.
okay, same scenario. The guy, our same guy. So he's got this existing balance of 200,000 on a VA loan, selling at 400,000. I'm an investor. I've got 200,000, right? I got 200,000. I'm going to come in, buy that house. I'm not a vet. I'm going to put the 200,000 down and I'm going to assume that $200,000 VA loan as an investor buyer.
Correct.
I can do that.
Correct. Yeah. So you still
Shut
have to
your
qualify.
face.
Yeah. You still have to qualify, and if you're in a primary residence buying to occupy, you have to qualify. Either way, you got to qualify.
So you got to
Uh,
qualify for the assumption.
you got to qualify. Yep. You
So
still
they're
got
going
to
to look at numbers. They're going
you're
to
gonna
get
look at
pay stubs,
numbers,
credit reports, all
all
such.
that
You get
stuff.
no matter
Yep.
what scenario it is. If we're
Mhm.
assuming we're going to qualify for it,
Mhm. But I find
okay,
sometimes the investors actually, they're prepared to bring the cash. So they may even be more likely to do the assumption than like a first-time home buyer is trying to get closer to
absolutely. This
100%
this opens up
financing.
a whole can of worms for me.
Mhm.
This is like pretty
Yeah.
epic. Hey, let me
But
ask you
what
this:
one
what
thing
if?
that is important though is if
Yeah,
if a veteran is doing the assumption as an investor because they're not occupying,
yeah.
they could not do that substitution of
Okay, so they
entitlement
can't do the substitution
if they're buying as an
of
investor.
entitlement.
Yep.
Okay,
Yep.
so let's say I'm a real estate agent. I list a home for sale.
Mhm.
I know there's a VA loan on there. It's got a killer rate, right? Uh, the vet who's selling it says, yeah, if they want to assume the loan, they can assume the loan, right? As the real estate agent, what steps do I take to get that ready? Like, do I go to the servicer and say, hey, we may want someone? How do we start this process? Or should the real estate agent initiate something when they take the listing to be ready for it? Or because that's kind of a mystery to me.
Yeah,
How do you assume it? Yeah.
it starts with the servicer. And so that's where if a real estate agent is going down that path and they're trying to help sell a property, help another buyer come in, the seller of the property needs to talk to the servicer first to figure out for sure what the guidelines are with that servicer. So
Okay, the
most
process. Yeah.
Yeah, so most servicers aren't going to add an overlay on top of what the VA wants. So, like most of the time, the VA doesn't require an appraisal. They're not going to need an appraisal. So, would you really need to prep the property if they don't need an appraisal?
No. Yeah. Well,
Right.
I was thinking
So,
when I said prep, do they have to? So basically, what we need to do is if the seller has to reach out to the servicer first, say, I'm putting my house up for sale. If somebody wants to assume my loan, what is your process? Can you send me the information?
yep. Can you send me a
Send me
package? Yep.
the package
Yep.
to have some. So that's what they need to do is
Mhm.
have the seller
Correct.
get that package in hand.
Correct.
Listing agent needs to go through that package, understand that package, what's involved on the agent side, on
Mhm.
everybody's side, right? So now they can confidently say, this is an assumable deal. I've got the details.
Mhm.
You know what I mean? It's not just
Yep.
it's assumable and I don't know how to do it, right? It's
Mhm.
assumable and we've reached out to the servicer. We know what their process is.
Mhm.
So
Now, one of the bigger challenges I see in the whole transaction of assumption, by far, outside of the money challenge, which we already addressed, is just the turn time. We talked about there maybe being an extra $300 processing fee. It's not really all that expensive, but at the end of the day, if you're trying to do that assumption, you think about it, that servicer is not really making a lot of money. I mean, they're already making their money off the servicing of the
yeah,
loan.
yeah.
So there's not a huge incentive for them to go quickly. So we've always heard that the assumptions seem to take a little bit longer
Okay.
than a normal mortgage would take. So
Got it.
I know the VA has put out some letters and sent some things to the industry, said, hey guys, we really are hoping to see you, speed this up and do them in 30 or 45 days. But we've heard a lot of stories of them taking 45, 60, 90 days and a couple times even longer. So you really have to
Interesting.
kind of stay on the servicer. I have a good friend that's actually a loan officer that was wanted to try it himself and is buying one as an investor. And I just saw him last week. He was up here in Detroit. We were talking all about his assumption as an investor. And he was pointing out to me that one of the largest VA loan servicers in the country, their package was wrong. There's some number one, they told him he couldn't do it as an investor, and he had to send them back the VA guidelines himself.
Wow.
And he was, I mean, he proved him wrong and they agreed that he was right. And, he looped the regional loan center in. But my point is having a trusted professional in your corner
Yeah.
that knows what they're doing,
Yeah.
even if that professional isn't get necessarily get paid because the loan officer wouldn't get paid. The servicer is the only one that's getting any money on this. It makes a big difference to have the right people to know what they're doing in your corner because most people would have given up. Him being professional and being part of the programs that I run, he's like, Mike, what do I do here? And we put together some stuff, and it looks like he's pretty close to the finish line on that. But he had to prove one of the biggest VA servicers in the country wrong more than one time. So
Interesting.
a little bit of patience on the turn time, a little bit of patience on the overall process, but it can be a big win financially in
Oh,
the right
huge.
situation. Huge
Huge.
win. So, yeah.
Huge. Yeah. Incredible, man. Dude, this has been great. This has been great. Look, Mike says all the time, it pays to work with the right person, right? It just pays to work with the right person. Look, if you're a real estate agent or a veteran and you want to get connected to a lending professional that knows what they're doing, well, you're in luck. You're in luck because we're connected to them and we can get you connected, no problem. If you're watching us on the magazine, down below in the article, there's a form you can fill out. And we don't sell we're not going to sell your contact information to a bunch of loan people. We're not. We're going to figure out where you're located, get you on the horn, and then get you connected. And that goes for if you're a real estate agent as well. If you're a real estate agent, you need a VA expert to help you with a deal. Maybe you've got this assumption thing going, or whatever the case may be. Just fill out the form. We'll get a hold of you. We're not going to spam you or anything like that. And then we'll connect you to a professional. If you're watching us on YouTube or on Facebook, something like that, there's a link that'll say click here to get connected to a professional. We'll connect you. Me and Mike aren't going to do the deal. Well, no, but we're connected to the professionals, very closely connected to them. And we will make sure we connect you to a professional in your area that can help you out. This has been really, really informative, Michael. Thank you.
I mean, we're changing the narrative, Frank. For decades and maybe centuries, people have been saying don't assume, but maybe you do assume. Maybe it's a good time to look into it.
Dude, I cannot even believe as an investor how many investors are going to come in with, a big chunk of change down, a lot of them. And then they can go, oh, wait a minute, I could assume this 3.5% VA loan. Like,
well, here's the benefit to the seller. The benefit to the seller, this particular story I was telling you about a lending friend of mine, that seller was able to get a little better price by offering that assumption than he would have got on the open market.
Right.
Because he's willing to give up some of his entitlement. And,
right.
He was able to say, like, hey, I'd prefer you just kind of replace that loan and we don't go through all this process. And he got a counter offer of a higher price for going through assumption. So
there you go.
It was a better deal for the seller. Yeah.
There you go.
Yep. So.
Wow. All right. Great stuff as usual. Thank you, Mike. I really appreciate it. And for everyone who's tuned in to us here on the magazine or YouTube or Facebook, whatever, you need to reach out to us, get connected to a professional, whether you're a real estate agent or a veteran. There's either a form or a link around here somewhere where you can do that. And we'll be back here again on the VA Home Loan Podcast to give you more riveting information about VA home loans. Thanks, Mike.
See you soon.
See you guys later. Adios. Bye-bye.